The S&P 500 was down 0.63% this week and closed at 3298.46. Thank you for watching this video. My name is Rodney Constable. I have over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, September 25th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. Now, we will come back to this longer-term weekly chart, but I want to start with the last 5 days. So this chart is a 5-minute chart that covers the last 5 days, so that's just this week. So you can see tons of volatility here, and we hit the lows of the week really at the opening yesterday on Thursday, September 24th, where we came down and kissed this 3210 area for just about a minute. And again, each candle is 5 minutes of trading. And you can see here on Friday, today, we had a pretty nice rally pretty much all day long and closed just underneath this 3300 area at 3298.46. And on Friday alone here, on Friday the 25th, we were up 1.60% on the S&P 500. So today's rally action really brought them, the S&P back up to where we were only negative 0.63% for the week. But you can see a tremendous amount of volatility this week. And you can also see that we spent the majority of this week trading underneath this 3300 level. And that's why I put this line in here. And you can see on these 5-minute candles that there was, some trading right around that 3300 level. And even this afternoon, got above it for just a few minutes and then closed just beneath it. So 3300 will be a key area next week to watch. Any of you that have been looking at my videos for the last couple of weeks know how important the 3330 level was, especially on the intraday charts. A lot easier to see it on the hourly chart. So if you haven't seen those, go back over the last couple of weeks' videos and get yourself caught up, because that 3330 area is also extremely important. So for right now, it really looks like we're trading kind of in a range, at least in the short term, between about 3200, 3210 on the low end and about 3000 or maybe 3330 on the high end. So we will have to watch next week to see, can we continue to rally and start to close above this 3300 area and then 3330? That will tell us that the market is starting to strengthen. And of course, any of you watching my videos for the last couple of weeks also know that in addition to the 3330 area, which is where this blue line is set, I've been talking about possible support around this 3200 area. And of course, in the short term, that's at least what we've seen for this week, having bounced off that 3210 area, right? Close enough. It was 10 points away. But you can see here when we go to the left on this 1-year weekly candlestick chart, this blue line here is set at 3200. We know that we've had trading right up to that 3200 area where it acted as overhead resistance at the latter part of May and the beginning of June. And then the 3200 area for a good portion of July acted as an area of support right here. So as we're pulling back, it would make sense for us to do exactly what we did this week and kind of bounce off of that 3200 area. Again, in this case, 3210 was where we stopped. But, these types of pullbacks, guys, most oftentimes, from my experience, resolve themselves once we get back down to at least the 200-day moving average, if not lower. Now, it's possible, of course, that this pullback to the 3200 was all the market needed and we can continue to rally forward. However, we are, just about 4 weeks away now from what's likely to be a very contentious presidential election. There's still tons of uncertainty out there around business and the coronavirus vaccine. So, don't be surprised if we roll back over and head lower over the next few weeks and find ourselves somewhere down around the 40-week moving average. Of course, that's equivalent to the 200-day. That right now is setting around 3,100. Of course, that's this green line here. That's the 40-week moving average. And the real area of support is going to be found once we get down to around 3,000 down into 2,950. So if the 40-week moving average, the 200-day moving average, doesn't hold around this 3,100 area, then we would most likely pull back to the 3,000 area or slightly below. Next, let's take a look at the triple Qs. The triple Q, of course, is the ETF that tracks the NASDAQ 100. And on the triple Qs, we were up 1.93% this week after selling off for the previous 3 weeks. And with this 1.93% gain, we are still trading about 16% above the 40-week moving average on the triple Qs. So that's still pretty high, guys. Generally you don't get that high above the triple Qs before you pull back to the 40-week moving average. So the fact that even after 3 straight weeks of selling, prior to this week, of course, we're still trading 16% above the 40-week moving average. This makes us vulnerable to further downside going forward. Now, it may not happen, at least in the near term, but keep in mind that we're still well above the long-term moving average on the triple Qs. So, it's great that we had this positive week, but we are still vulnerable to further downside in both the S&P 500 as well as the NASDAQ 100, the triple Qs, and really the overall stock market. So caution is still advised. Before we go any further, let me ask you a question. Do you have a stock market risk management system? Something that helps you understand the various risk levels in the stock market on an ongoing basis? Do you know when it's safest to be in equities? Do you know when it's most dangerous to be in equities? Do you know the direction of the short-term trend on an ongoing basis? Do you know the direction of the overall trend in the stock market? My system is called Simple Market Signals. Simple Market Signals is market-based. There's no opinions, forecasts, or guesswork in Simple Market Signals. It took me over 20 years to develop Simple Market Signals. I developed Simple Market Signals by reverse engineering the stock market, and I studied the stock market over numerous time frames, including in numerous bull and bear markets. And what I found is that certain conditions exist during these various market phases. And then based on that information, I created simple, easy to understand signals around these different phases of the market. And the thing is that most people don't know about or have access to the data necessary to do the research that I had to do to put together this model. Now let's take a look at the signals. The red signal has the highest equity risk associated with it, and the worst sell-offs, including bear markets, will happen when the signal is red. When the signal is yellow, this means that equity risk is moderate, and sideways to slightly up or down price action is very common during a yellow signal environment. The green signal is the best signal. It has the lowest equity risk associated with it, and most all upward progress in the stock market will be made in a green signal environment. Said another way, it is very hard to make money in equities unless the signal is green. Okay, a quick refresher on the Simple Market Signals weekly signals and how they can help you. The signals are green, yellow, and red. The green signal is the best risk-reward ratio for equity investors, and what you're going to find is that the stock market makes most of its upward progress when the signal is green, okay? The worst risk-reward ratio signal for equity investors is when the signal is red, and what you're going to find is that bear markets and the worst downturns in the stock market happen when the signal is red, like during the 07 through 09 bear market, as we see here. So again, the best risk-reward ratio signal for equity investors is when the signal is green, and the worst risk-reward signal for equity investors is when the signal is red. Now let's take a look at the first 3 months of 2020 so you can see how Simple Market Signals could have helped you in the most recent downturn. We know that we came into the year with a strong stock market, so we had a green signal for the majority of January, but on January 27th, the signal went yellow for a couple of weeks. We went back to green in the first part of February, and I warned my newsletter subscribers on Saturday, the 22nd of February, that I felt like the market was starting to roll over and that things were changing. And so I gave people a heads up right here over the weekend, and I told them that if the market continued to sell off, that we would probably see at least a yellow signal, if not worse, the following week. And that's exactly what happened. On the 24th, the simple market signals risk signal went yellow. Now, one of the other things that I want to point out here is, in addition to the risk signal, I also have several trend direction indicators in this simple market signals model. Now, the longer term one is called the general trend indicator, and the general trend indicator went negative on the 25th. So on the 24th, the signal went yellow. The general trend indicator went negative on the 25th, and then 2 days later, the signal went red. The risk signal went red. So think about this. All in 1 week, just a few days apart, we had a yellow signal, we had the general trend indicator went negative, and then we had the risk signal went red on the 27th. That was Thursday, all right? And by the way, this general trend indicator is a positive negative signal, and it operates totally independently of the risk signals. It's just trend. So the general trend indicator gives you still another way to monitor and control risk in your portfolio. And guys, that general trend indicator had been positive since October and then went negative. So right there, just those two signals alone told us that something was changing in the stock market. And then by the 27th, the signal had went red, and we can see here that the market fell from there. As part of the simple market signals model, there are three powerful indicators. There's the simple market signals proprietary risk level signal. There's the short-term trend indicator, which helps clarify short-term moves in the overall U.S. stock market. And a normal signal length for the short-term trend indicator is anywhere from 1 or 2 days to 7+ weeks. Then there's the general trend indicator, which is designed to stay positive during the bulk of most uptrends and negative during the bulk of most downtrends. And a normal signal length for the general trend indicator is anywhere from 2 weeks to 5+ months. We disseminate the information through the Simple Market Signals weekly newsletter. In the weekly newsletter, you will receive the proprietary risk level signal on the overall U.S. stock market. You will also receive the proprietary risk level signal on all 11 major sectors of the S&P 500. You will also receive the short-term trend indicator signal. You will also receive the general trend indicator signal. You will also receive market and sector performance information over multiple time frames. You will receive a recap of what happened in the stock market for the past week. You'll also receive technical analysis information, fundamental analysis information, and yield curve information. There is a ton of information every week in the Simple Market Signals newsletter. And a subscription to Simple Market Signals is just $19.95 per month. That's less than 67 cents per day. It's billed monthly on your credit card. There are no contracts. You can cancel anytime, and your first 2 weeks are free. And guys, I want to set realistic expectations here, okay? The newsletter isn't fancy. It's effective. It's plain text, no color, no fluff. And please note that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to subscribe to Simple Market Signals. And again, that is just due to international compliance regulations. Now let's recap what you will get with your Simple Market Signals subscription. You will get the weekly emailed newsletter with all of the contents we just talked about. You will also receive special midweek updates when warranted. So if there's a major signal or direction change in the middle of the week, we're not going to wait until the weekend to get you that information. We're going to get that information to you as soon as possible via a special midweek update email. The best fit for a Simple Market Signals subscriber is an investor or trader with at least a 6 to 8 week plus time frame that they're focusing on. If you're a day trader or a really short-term trader, Simple Market Signals may help you a little bit, but the reality is Simple Market Signals is designed for those investors and traders with at least a 6 to 8 week plus time frame that they're focusing on. And if you would like even more information about how you can benefit from Simple Market Signals, I have the following videos that will be linked in the description box below this video. And to subscribe to Simple Market Signals, you just need to go to the website that you see on the screen here. That's https simplemarketsignals.com. It'll take you about 4 minutes to subscribe. It's that easy. Once you reach the website, the first thing you will need to do is accept the cookies. Please notice that due to international compliance regulations, you must be at least 18 years old and a citizen of the United States of America who is currently living in the U.S. in order to use this website or our services. And that is just due to international compliance regulations. All right, so to get started, all you have to do is click this green button, and that will take you to the product page. And this explains, of course, what you get with your subscription. And then just make sure that that says 1, because if there's more than 1 in there, if you have a 2 or a 3, you'll get multiple subscriptions to the service, and you only need 1. Click the Sign Up Now button, and that will take you to the checkout page. Once you're on the checkout page, fill in the necessary information, anything that is required, including the email address. Keep in mind that this is an email newsletter, so we will have to have your best email address on file, and make sure this box is checked, because that's how your email address gets into the system. So if that is unchecked, your email won't get transferred into the Simple Market Signals system, and you won't get your newsletters. So please make sure that box is checked. And then, of course, just double check, make sure that your monthly total is going to be $19.95 a month. Remember that your first 2 weeks are free, so your first renewal date will be 2 weeks after your subscription date. Fill in your credit card information. You will need to accept the privacy policy and check that box that says you've read and agreed to the terms and conditions. Click the Sign Up Now button, and it's that easy, guys. It's probably going to take you maybe 4 or 5 minutes total to fill in everything and subscribe to Simple Market Signals. Now, when you subscribe, okay, understand that everything is tied to your email on file. All right, so once you subscribe, you go out to the website, simplemarketsignals.com, and it'll take you maybe 5 minutes to subscribe. It's pretty easy, and you just follow the prompts, and then your email on file is then going to drive everything going forward. This is an emailed newsletter subscription. That's how we disseminate the information, and you should get an immediate emailed confirmation of your subscription. You will also receive an automatic welcome letter that is automatically generated once you subscribe. So if you don't get that welcome letter beyond your confirmation, okay, of the subscription, if you don't get that welcome letter, if you don't see it in your in basket, then go check your spam, your junk, or your promotion folders, especially in Gmail. Having a lot of people that are having the newsletters and everything coming from Simple Market Signals going into the promotion folder. So please make sure that you check your spam, your junk, and your promotion folders. And also understand that the newsletters go out on the weekend. All right, so the goal is to get it out Saturdays by 2 p.m., but it could be any time over the weekend, depending on how long it's taken me to do the research necessary for that week's newsletter. But I try to get it out by 2 p.m. Eastern Standard Time every Saturday if I can. Again, earlier if I can make that happen. And then the next edition, right, once you subscribe, understand that the next edition, right, so if you just subscribe on a Monday, Tuesday, Wednesday, whatever, the next regular edition is going to be set out on Saturday. All right, and then once you subscribe, we will send you, as soon as we can, the latest edition, but we have to send that out manually. So just be patient with us. But again, within a day or two of your subscription, if you don't get this latest edition, then go back and check your spam, junk, and promotion folders, because it's probably hidden in there. All right, so you should get the automatic welcome letter, and then the latest edition within the next day or two of your subscription, and then again the standard newsletter goes out every weekend, but we try to make it no later than 2 p.m. Eastern Standard Time on any Saturday.